Yep, indeed. Rightio, guys, here we are. Sorry for the delayed start. It is just one of those things that happen. And here we are live and true coming to you from, firstly, Tasmania and Australia, from where I come to you. And my name's Geoff Pyne. I'm a senior trader with Actions to Wealth. And it is that organisation that brings you this trading market update each and every Sunday. As always, we'll be trotting around the globe to get some ideas for what's coming up in the week ahead in the markets, and to do first up the macro version or the big picture stuff. It's very, very good evening in New Zealand to Julian. Hello, Julian. How you doing?
Hey, Geoff. How are you, mate? I am doing very well. Thank you very much. And
yeah, it's a funny thing, you know, both you and I, when I say I'm on top of the world, it's kind of not true, is it? Unless you stand on your head. So what does antipodes mean? There you go. Question without notice.
And there it is. Thank you very much. Well, that's important. So look, I am a tourist to these parts, as you well know. I've only been around 10 years or so. So you can't start throwing crossword puzzles at me straight away. So go crossword puzzle question. So why don't we? That's my cue to politically say, why don't we talk about the macro environment?
Okay, I'll shut up.
No, that's all right. Don't worry. Look, this is a good discussion. I will in the interim, we will try and find out what antipodes stands for. I think it's got something to do with either Latin or animals or people or when it was first discovered, or any of the above,
or anything else.
So, yes, yeah.
Somebody will be googling it madly. Don't worry.
Yeah, and if you've watched Total Recall, it's the other end of the big tube that goes right through the middle of the earth. To the London.
That's right. HQ. Maybe that's what it means.
That must be what it means. So look, hi everybody, and welcome to the show. Look, this is going to be a reasonably quick one for me because I've been a little tied up this week doing other things. But what I want to do is I want to share with you a couple of my thoughts about things that are happening out there in the world that maybe are unusual for this time of year. So I haven't met many traders who said August was the best month they've ever had, right? It doesn't tend to happen that way for two reasons. The Northern Hemisphere is on holiday. And secondly, we get crazy volatility that pushes things in different directions, right? So do you remember 2 or 3 weeks ago, we had that big sell-off in gold on a Monday morning out of Asia? Well, here we are 2 or 3 weeks later now, and gold has now wiped out all of that and has gone back to a new recent high. Now, we talked about this last week. We talked, and Ainslie conveniently is popping into the show, and she will have more to say on this later. My big picture view of this, and when we talked about this the other day on the show, I was saying there could be something going on here, which could be the end of the bear run. Okay, gold has been struggling now for the best part of 2 to 3, well, not 6, 9, 12, no, 9 months, 12 months. I don't know when it got to 2000. Sometime, ages ago, guys. You can all look at the chart. You don't need me to tell you when that was, right? Well, but here we are.
20.
Thank you, Ainslie.
Sorry. Just to be accurate.
We could do this section together if you like, and then that short circuit your piece as well. So, so when I was there, I talked last time about maybe this being the beginning of a move in precious metals that was going to last a little bit of time, right? So, at the end of the day, the price that you get involved in isn't actually that important because we're maybe looking at, our target in our head is new highs and beyond. Now, why do we feel that way? Well, because the cycles are still supporting us. There's still 60-year, 90-year cycles are supporting us. I'm not going to show you any charts. It's not my gig. Ainslie will do those things. I'm just going to remind everybody that underlying this are some secular forces which maybe are going to push gold a little higher. So is this the time when precious metals start to rally? Well, the answer to that question is always from a technical perspective. We go look at the charts, we use our risk management tools, we do all the stop loss stuff, and Ainslie will talk about that. What I'm looking at is the big picture. And for me right now, I feel that the time's up for gold going down. So right now, my sense is that gold is going to do something special. Now, why do I say that? Well, because normally in August, you tend to have where things have been going up, you tend to have them going down, right? So, for instance, something like coal or gas or gold or other things, right? Crazy things happen because people, when they want to move positions around, don't have the liquidity they normally get when it isn't the holiday season, right? So, here we go. right? So what's happened to some of those things? Well, coal, for instance, let's look at the price of coal. That was traded at $160 about 3 weeks ago. Then it fell to 130 in 3 days, right? That's not an insignificant move, more sort of digital currency like in terms of its percentage moves, right? Now it's back to 150 again. Okay, so this is interesting. So why is this interesting? It's because we're still seeing the trends continue, right? Natural gas broke out to a new high this week. Oil is starting to recover again. Is there something going on here? And the answer to that is it appears to be the case. Now, you'd have thought that this would be a rough time for oil and natural gas, things, these raw commodities. The world's still sort of struggling with lockdowns and struggling with post-COVID environments, whatever it is, right? And we know that China's struggling with its economy on one hand and with COVID restrictions on another that's causing shipments and factory layoffs. And anyway, you get the picture, right? So the answer then is when we look at the charts, they should be going down. Well, have they? And the answer to that is no, right? No, they're not, right? You look at natural gas, new high this week. You look at oil, it got down to $61, I believe, last week, about 10 days ago. And now here it is. It's bounced back $7 or $8. That's like a 10% move in a week. Here we go, right? Why is it doing this? Well, this is the major question. Why is it doing it? And the answer really is, I think, because they're not done with their big moves. Maybe there's more coming. If you look at copper this week, it began to start to break up. So all of these things are starting to move again. Now, this might be crazy August and there might be some strange things happening, but they normally tend to happen contrary to the previous trend. So when you see the markets breaking to new highs, that's when you start to pay attention because things are going to be interesting then, right? It's not that it's been going up, now it's collapsed, and that's August for you. And then come September, we'll find a way to rally. No. In August, what we've seen is markets starting to break to new highs. The S&P put a new high in place this week, okay, on holiday time. None of this makes any sense unless you believe that things are going to continue. So maybe because Powell didn't come out and change the world at Jackson Hole last week, he talked about thinking about tapering. I guess you could argue whether you think tapering makes a difference or not, I don't know, but let's assume it does, right? He talked about thinking about tapering. And that's interesting. But as we all know, it doesn't matter until he sees the unemployment. When the unemployment of the minorities comes down, then he will move quickly to restore things back to whatever you might consider to be normal for interest rates, and also the amount of bonds and mortgage-backed securities that the Fed buys. So what's the message from today? The message from today is, oh, that's interesting. Strange things are starting to happen. It's happening in gold. Not so much silver, but it's happening in gold. Oh, hang on a second. Haven't the cryptos all been rallying the last few weeks as well too, right? There's another thing, right? Okay, they started to bounce again too. Well, isn't this interesting? So here's the theory, right? And this is where I'm going with this stuff, right? If this is happening now when it should be happening in September, I wonder what September's going to do. Maybe this is the beginning of a major move and we're just going to keep going. Okay, then I will start to find I'm going to start to find my words on a bit of paper and start to chew on it, because I did say that I thought inflation was going to be transitory. If it turns out to be more secular, I'll be the first person to take my notebook and basically eat it all up. So here's the thing. Let's see how the next couple of months unfold. But for the time being, from a trading perspective, we've seen, for instance, as Ainslie will talk about, gold break up again. This for me is a very interesting buy signal. Who knows where to get involved? Ainslie has a better clue on that than I do. But I think what's really important is that maybe the down move is over there. And if it's over in gold, what does that mean for the rest of the precious metals and the industrial complex? So let's keep an eye on this and see where it goes. I am still a bull on commodities, and I'm remaining a bull on commodities. Perhaps the correction is over. Geoff, that's it for me.
Mate, love the query you had on the end of that, whatever you consider the new normal to be, or whatever you consider to be normal in terms of interest rates. And that leads me into the ponderance that wonder what the hell the new normal looks like. Will there be a normal anytime soon? Look,
for me, I think it's really clear, right? If it's in America, we're going to have negative real interest rates for the next 10 years. Okay, that's the new normal, right? That's the Fed. That's the way the world's going to work. If you want to pay off this debt, the best way to pay off this debt is growth and negative rates. Okay, so if inflation's 4 and rates are 2, you're losing 2% a year. You've got to find something else to do with your money, right? That's going to be the pattern. I think people have got very used to seeing a positive return on their money against inflation for the last 30 or 40 years. Maybe they have to get used to the 1970s again. And I think that's where it's coming from. So leaving the money in the bank isn't a very good idea. We've got to get out there and spend it. Go and buy natural gas, gold, and maybe even coal. So we'll look at the, this is why I think, just having spoken to Shukri for an hour, in fact, NFTs, in fact, is also the way to go. Digital art seems to me to be the new art, the new gold. So maybe we need to look at that as well too. Look, I'm buzzing. Yeah, I have had for a long time a neutral attitude towards interest rates. I never believed that the sell-off we saw in January and February was going to last very long. Right now, I'm beginning to see if this inflation does not settle down in the next couple of months, and the Fed continues its drive towards social justice as a means of making policy, which is something the Federal Reserve should not be involved in. That's not their core job, right? That's what politicians' job is. It's not their job, right? Their job is to disappoint. Then we are going to see a backlash, and that backlash will start to be a steepening of the yield curve, and then that will be a problem. The banks will do okay, but nobody else will.
Wow, there's a whole heap of subjects we could talk about. You could talk about all night, things like housing prices and what that interest rate situation actually means to the bubbles that we're seeing. Well, bubbles in housing prices, they're just ridiculous where you live. They're ridiculous where I live. I'm not sure about the rest of the world, but I think they're pretty much in the same boat. The new normal. It's a very, very interesting topic. We must challenge it one day, but we have to put aside a few hours, I would imagine. Mate, thank you so much. Really appreciate it. We'll catch you next week.
Cool. Cheers, guys.
Okay, we spoke a bit about gold. Julian spoke about gold, and I note with interest that it had a pretty strong day on Monday. Nice retracement on Tuesday, Wednesday, Thursday, and then bang, Friday. That seems to be the day for gold.
Friday. Hello, how are we going?
I'm well, and you?
That's good. Yeah, no, going well.
How are the COVID lockdown nerves treating you?
The bottle shop's doing really well.
Perfect.
That's
Good answer.
That's all I can say. It's been a long week. I think I lost 3 days, but that aside, it's been a really interesting week on gold. And I'll say that because I put a post earlier this week saying, we came up and we had a little kiss of the 200 simple moving average on the daily chart. Very important. And we knew that was going to be a level of contention on the resistance side, and it did. It came back. But if we look at this on a really technical basis, and it is just boringly technical, look at this, shall we? We're in an uptrend. We've got higher highs, higher lows, We've got a rejection of the 200 simple moving average. We've got 3 days down in an uptrend, bang, and up we go. And I can only say that now because we're in hindsight. But coming over to the 4 hourly, look at this. I know we talked about last week being quite remarkable in the fact that it had nothing remarkable happening in face of the US dollar going gangbusters on a rally, and it just sat and went sideways. It didn't nosedive. But this week we came up, and as I said, we've hit R2 on the 4 hourly. So this is weekly data here, weekly R2, and it came back down. It didn't ever go below. We did not have a close below the weekly pivot. So what does that tell you as far as?
Tell me it didn't go from R2 to D2.
No R2, D2, and no C3PO anywhere in the equation. Sorry, Geoff. But having said that, she just sat there. Gold just went there. It held its balance. It just said, you know what? We're just going to wait. We're just going to sit. We're just going to be cool. And then along came Jackson Hole Symposium. hello, boys and girls, and look what happened. So in light of Fed Pal saying the two elements, inflation, employment, we can't give definitive answers about when we're going to taper. We don't know what's going. Bulls took hold of that. And then there was his other little overlying comment about something about the Delta variant. The Bulls took hold and bang, we're off and we've gone to the races and we took off. And gold up through 1800 and bang, hello, we've closed at 1816. It went to a little bit higher. The next level is 1825 and 1832 is definitely two areas of significance. If we can break through that. But as Julian's just said about the commodities are rallying and going back gangbusters. And Jeffy, just let me know if this comes up, because I'm just going to change screens and not always it comes up clearly. Have we got copper on the site on the sites?
Not yet, no.
What is it?
Now I do.
Yeah, copper. Okay. So if we actually want to have a little look at copper, look at this really low bouncing of a 200 simple moving average. Hello, is that not just one of the most beautiful technical setups that we've seen in a long time? And off it goes, comes up, goes through that level of former support, and off we go. We've now clipped 200 on the 4 hourly. And why I'm pointing this out is copper is known to be a forerunner for gold. Just is. Look at that. Look at that move. Perfect technical setup. Copper's really nice. And if anybody knows the way I trade, I like things to be neat and tidy, and oil, gold, and copper trade really neatly off levels. And this is what we've got. But this is really interesting. It's a strong move, and I know it's a weak US dollar and negative yield rates, which is what I was getting excited about, because hey, when it's negative yield rates, this gives gold a real good impetus to move north. And I look, to be quite honest, I have no preference whether gold moves up or down. I don't care what moves up and down. I just need to be on the right side of what is moving up and what is moving down. That's how we make money, right? It's just as blatant as that. But at the moment, with the seasonal bias, the commodities, and I'm also looking at oil, which it's struggling just a little bit, but it's on the north side, but we'll talk about that in a little bit. But we've got copper moving north, we've got gold moving north, and we've got a few other things moving north. Let's just see how that goes. My only caveat for this week, Geoff, is, and I can't believe I'm saying it again, it's NFPs are on Friday. I cannot believe.
Yes.
I cannot believe we're talking about the beginning of September. I'm just like, oh my.
Springtime.
God. It's spring on Wednesday, and all I can say is thank goodness, because this has been the longest winter of discontent. I can tell you about.
If you live in Sydney, I can totally get with that. Yep.
Yeah, let me tell you about that, boys and girls. It's just been a very fun time at home. Anyway, as I said, Jackson Hole was the impetus we were looking for to move it back up again. We got it after 2 weeks of ranging in a stupid level. Yeah, I like gold. I like trading gold. I really do. My best time of trading gold is actually when it's moving, not when it's going sideways, because it's like watching paint dry. And we've all got to admit, we don't want to watch paint dry when we're actually trading. So there it is. Where to next? I think we're in for a bit of a roller coaster this week, because if you look at the last NFP figures, blew us out of the water and sent gold ricocheting beautifully back down to here. This was the horrible moment. Every other, pretty much, we've had some really good NFP figures that were negative, that were good for gold, and sent gold on a rally. And we've been enjoying those, but let's see what's going on and how the market reacts to what Powell is saying about tapering. And by the way, with Powell and his talk about taper, well, not sure about when he's going to start tapering, there is a dissent amongst the ranks there as well. There's a couple of the Fed members who are saying, well, hang on, we've met the requirements for employment, we've met the requirements for inflation, we need to start in October. Yeah, and then he says, well, I'm not sure about the Delta variant because that might keep it a little bit all up in the air. If you're a gold trader and you're looking long gold or long comms or anything like that, that's good, okay? Dissent amongst the minions is good because that means that we can actually take a bit of a hold and things will go further on the commodities. That's all I'm saying, is just got to keep a bit of an ear on what's going on over there, but keep an eye on the price, which is going really well here. But my caveat is Friday, NFPs. Just be careful.
Okie dokie, we'll be watching. And no surprise, of course, that the Comdols did pretty well this week. And let's see if the word I'm looking for, the next gen of I can't call them commodities yet. Can I call them commodities, Shukri?
No.
No.
Degenerate.
They're degenerates. Exactly, Shukri.
Degenerate assets.
They don't get that. No. Not yet. Can't go there.
What's going on anyway, buddy?
It's a summer.
Is the summer set to continue?
It's a summer and it's all set to continue. Maybe a pause in September seasonally. So I won't be surprised. But Bitcoin is challenging 50,000 again. No surprises there. Just holding on this. It was going down and then it went up again after the options expired. Last Friday of the month is always options expiry. Now it looks like it's going to go back up again, trying to re-challenge 50 again. Ethereum is also back up. But what I want to talk about is Kusama again, because the first round of the Kusama crowd loans, another one was listed this week. I'll show you about that. But really bullish on Kusama because I believe that the next generation of crowd loans is coming in the month of September. So in order to enter these crowd loans, and I'm going to show you the mechanics afterwards. I can draw, right? Good. I can draw here. What this means basically is you put your Kusama and lock it for 48 weeks and you get reward tokens. At the end of 48 weeks, you get your Kusama back. Basically, you're going to get your capital back. So I think that Kusama is going to start challenging its resistance here, at least for the first week of September. And this is an example here. This was Moon River that was calculated. So it depends on where you bought your Kusama from. If you bought it at $300, you would get around 30 Moon River, which means that you would now be making around $3,000. And you will get this back, okay? You will get this back out of 48 weeks. Now, what happens of this $3,000? You can now withdraw 20%. So if you withdraw 20% of this, you are already in profit. Now, if some people bought at 100 something, they are even more in profit. Now, if people bought at the high at 600 and nobody knows why people buy at the high at 600, you are already break even. Whatever comes in after this is pure profit. So I think because of this nature of profit where it's going to be profitable anyway, I think there's going to be a lot of demand for Kusama. This is Moon River. This is basically allowing Ethereum applications to go onto the Polkadot network. It's done extremely well. So I do expect good performance in the future. And why did it go extremely well? The most important thing is the why, because if you have been reading the news, there has been a bug in Ethereum, Geoff, a bug. An EVM bug. So when yes, that's why this just went to the moon, Geoff. I was wondering, like, that doesn't make sense. I was looking at my screen and I said, look, this doesn't make sense. I better not tell Geoff because maybe I need some glasses, you know, this doesn't make sense. Upon checking, I then found out it is because there is a bug in Ethereum and people are now more confident on the new tools like Moon River. So I'm bullish on Moon River. bullish on Moonbeam, which is also going for another IDO like this. And Kusama is the place to be, and so is Polkadot.
And I've got to say, if any of you guys in the room happen to be listening to Shukri when he was trying to teach me how to invest in cryptocurrencies on Trading Buddies some months ago, he said, buy Kusama. And then he said, and I don't understand all this crap, I mean stuff. And then he told me to stake it into Moon River.
Yes, correct.
Unbelievable. Amazing.
Geoff, and Kala is coming out soon. I didn't know Kala was there. I said, Geoff, where do you put it in?
Do you mean
Kala?
I'm going to do something else? I just made money twice.
Join us, guys. Again, don't forget the show. Join us every Tuesday. Hope to see you guys there as we go into the next phase of whatever you call it. Staking Kusama.
You're saying whatever you call it. My God, what do I do? Thanks, mate. Much appreciated. All right, let's talk black gold now and back to Ainslie.
It's back to me again. Hello, all. Again, it's me. Back to. Let me just grab a chart. Let's go back. Now, a lot of this actually just goes. If you've just been listening to what I've been saying, it is very much what is happening with a weaker US dollar. It's recovered. This week has seen a bit of a recovery after the Delta scare and how that actually really impacted oil and the demand and the outlook for the demand. It just went downhill very quickly. In fact, it went downhill for 7 days in a row, but it bounced back up this week and it's continued to hold it. As you can see on the 4-hourly chart here where I'm just circling at the moment, there was just not a lot happening there because we were all waiting to see what was happening on the Jackson Hole Symposium and what the further plans were for future tapering and whether the US dollar and real yields would actually stay negative, which is what it's looking like for the time being, by the way. There was a bit of a push up. There's a bit of a hangman hanging around there and a little bit of reticence coming into the 200 simple moving hour on the 200 simple moving average on the 4-hour. I'll stop trying to do shorthand when I speak, by the way. Sorry about that. But as you can see here, over here on the daily, look at this. We've had quite the move up with this removal from the China ports opening. We've also had the US dollar weakening, and then we've also had a supply issue in the Gulf of Mexico as well this week. So that also added to what was going on in the whole pool with oil. And as we know with oil, you've got to be really careful with the fundamentals because it can be the smallest thing. Afghanistan aside and everything like that, I was looking for a bit of an angle with what was happening with Afghanistan and the Taliban and what could have happened with further conflict in that whole region, but it doesn't seem to have impacted anywhere at the moment. The big things on the big ticket items this week have definitely been the weakening of the US dollar, optimistic demand and outlook again in China with the reopening of some of the ports. As we saw with last week, we had an immediate short sell in oil because of their major port closed down, and that's reopened and it's a little bit more optimistic this week. So and they and I know I sound a little bit cynical, but they did record 0 COVID infections this week. Moving right along. Anyway, so that's what they recorded. So optimism flowed into the market. Dollar weakness and an issue with supply outages in the Gulf of Mexico and Jackson Hole. Obviously, you can see here from the move up on Friday. It was nowhere near as dramatic as we saw in any of the Comdol currencies or in gold or any of those associated commodity markets. But there we are. Seasonal bias, obviously, at the moment is for it to rally up through September, which I hope we'll finally get a good, strong rally. And I know I'm being really optimistic here, because you look at that and you go, last 2 weeks, what are you complaining about, Ainslie? This week has been a really good, strong move up. And it's just like, yeah, but it's not what it normally does. But fingers crossed. Let's see. I think we could look for a bit more of an upside on oil. Okay, that's oil and gold, and I'm over and out, Geoff.
Awesome, May. Thank you so much. Much appreciated. That normal word came out again. We'll get there eventually, I'm sure. Good luck with the week ahead, and let's hope those numbers start tumble down below 1,200. Oh my God.
Yeah, look, we've done a PB. We've done a PB in New South Wales this week. Today we've done over 1,200, and the fabulous news that we got yesterday was that on Friday was that my girls will go back to school on the 8th of November. No, that wasn't the 8th of September. It was not the 8th of October. That is the 8th of November.
Good news is you'll be able to apply for a teacher's job by the time this is all over. Not that you'd want one.
I think my classroom will have shrunk by then. Oh, good Lord. Anyway.
All right.
We'll leave.
Thanks, mate.
See ya.
Have a good week. We'll catch up with you next week. All right.
You too. Bye-bye.
Let's go back to, we haven't been there yet. Fancy you haven't been to Singapore yet, this show. Let's do that and join up with my good friend Lloyd, who's going to talk all about the indexes on the major currencies. G'day, buddy. How's it going?
Hi, Geoff. It has been a rather rough week for me. Not that the market has been unkind to me, but rather rough.
That happens.
Yeah, should happen. I think it's time that it happens, since that has been a pretty good roll. But taking all in my stride and see, I think when rough time comes, we can sit through it. That's where they patiently wait for the good times to come. Yeah, that's about it. So with that, all right. So last week I tried to trade dollar cat. The setup didn't happen for me. So in fact, dollar, I was speculating that it might be on at a high of a range. Yeah, unfortunately, when this happens, it was on Friday and it was really near Jackson's symposium, so I didn't really actually took it. Same for Euro Swiss, I didn't really have a credible setup throughout the week, so there was no go for either of these two setup for me. So coming this week, since like price still refused to break the horizontal level, so for the Euro index, seems like it has positioned itself at a pretty good level to actually allow us to trade it to the high side. Yeah, so as that, I'm pretty bullish about Euro, so we shall see what comes up the next week. Yeah, what setup that we have. British pound, pretty similar state as in Euro. Yeah, so it doesn't. I mean, seems like it has a false break from last week, and now it has recovered. Yeah, so now, but comparatively, I'm still much more bullish on Euro compared to pound, because the range on Euro is actually wider. Yeah, so it will make it easier for us to actually range trade compared to the British pound. Now, the Japanese yen, I don't see this as in a range, nor neither is it a trend. It's really in the middle of nowhere, so I'm still probably not going to be very interested in touching it. Now, the Aussie index is pretty interesting. You can see that price actually broke horizontal level, consolidate, broke, and possibly it has come up to test a near-term horizontal level. Yeah. So on Monday, what I'm going to observe is that whether it will actually rally a bit more, hit 74, and then get rejected down. Yeah. So I'm going to observe this more on Monday and see how it turns out. Now CXY has the same outlook as Aussie index. Yeah. But I'm not very confident in trading CXY simply because of this level. Yeah. I don't have enough space to actually trade to the high side or to the low side. Yeah. As such, I'm going to keep out of trading the Canadian index. Yeah, just going to upgrade this. Now the Swiss, very nice, right? You can see that price is probably still hugging at about 110. So I'm pretty keen to see if by Monday or Tuesday I would get a strong reversal price action at this level to see if it price continue plunging. Now Kiwi, you can see that it has a very, very gradual drop. Yeah. But at the same time, on a wider outlook, you can see that price is actually hugging. Yeah. So on coming Monday and Tuesday, again, I'm very interested to see if price at $70 will work its magic and continue its merry way down. And the last on my list is actually DXY, which is the complete opposite of the Euro index. The price has been keeping at this level for quite some time, and seems like it's quite reluctant to break out of 93. Yeah, so for the upcoming week ahead, I'm going to see if price will actually continue on its merry way down all the way to 90. Yeah, as such, for this coming week ahead, what I have on my list is actually trading Euro USD, the same old pair, and see if price actually breaks this level. You can see that this is a very, very significant high. So just waiting for any chance to see if price will give me a break and retest, and I'll be happy to trade it to the high side. And the opposite will be Pound Kiwi. Now this is more of a reversal trade. You can see that actually price is very much contained in the range. Yeah, since Pound, as I've just now presented, is also the Pound index is in a range, then it makes sense to see if Pound Kiwi will actually have a bounce off this level. Yeah, so the Euro USD and Pound Kiwi will be what I'll be keenly observing for the coming week ahead. Probably I'll be skipping to trade on Monday just to let the market settle down after the Jackson Hole Symposium to see if there's any surprises built in, just to avoid any built-in surprises.
Lloyd, I think I'll be with you on that score, mate. That sounds like a very wise thing. I've got a funny feeling that we'll see a few gaps in the market tomorrow as a result of that. And I agree with you. I'd like to see a bit of price action before we actually get into the week's trading. All done, mate?
Yep, all done for me.
Thank you so much. We'll catch up with you on Trading Buddies tomorrow and Tuesday. And then, of course, Ash and I back on Wednesday, yeah?
Yep, looking forward.
Looking forward to the break, I'm sure you are. All righty, my turn. To answer your question, Subra, and how you doing, mate? Good to see you in. We unfortunately were without Alexis today, who was our fundamental expert, and she would have had pretty much a fair bit to say about Jackson Hole. Catch up with her, I hopefully think tomorrow with Lloyd on Trading Buddies if you want some analysis on that. But I've got absolutely nothing, mate. I've got no idea what happened there, and it's kind of like asking me what you take for morning sickness, because I've just got no idea. I'm sorry. But what I do have an idea on is some technical charts, and let's have a look at those now. Now, what I normally look for on a week end is what I call game changes. And there's only two game changes. Don't look for them on the weekly chart. There's only two game changes this week, and one is Aussie CAD, the other is Pound Yen. And the reason I call them game changes is they change the direction of the market, of course. Such things as this bar here, or even this bar here, or this bar here. And we've got one of those bars here. Yes, it's a bullish engulfing bar, but that's not the reason I like it. The reason I like it is it's had a low lower than the previous bar, and it's closed on or near its high. Now, when I look at that, I also see a break of trend here. This one is it's bang on the monthly pivot if we were to enter at that level. So I'm not inclined to do that, but let's have a look at the daily chart where we've got, yes, a break of the trend line, but there's the monthly pivot I'm talking about. What I'd really like to see here is that 4 days of rallying, or boost, if you like, come back and service with a higher low in this vicinity here around about last week's weekly pivot. I would suggest next week's weekly pivot, or tomorrow's weekly pivot, probably up here somewhere. So that might still be a good spot, might even form a confluence with that trend line. That would be a good place to look for a long, in my humble opinion. Because we're so close to the end of the month, that may not play out for the monthly pivot still being there when we actually look for that long. But if it is, then I would suggest that we take some profit in that area before we get through that monthly pivot. As you can see, we haven't been above that since the beginning of the month, pretty much. So take that into consideration. The other game changer bar is this one on pound yen. Now, I actually don't mind this scenario, and I will be looking to trade it if we can break through the top of that range. We're looking at the monthly chart here. So we've got plenty of room to get into the market and get some profit before we hit those highs. The reason I like it is because we've broken really two strong resistance levels, a bit of a cloud of a price in there, and we've put in a rejection bar. It's a bit hard to see. I'll tighten it up a bit. Put in that rejection bar off pretty much both of those levels, and it does look to me as if price goes back to here, it'll take on these highs. So on the weekly chart, we've already got that reversal bar, not an engulfing bar, interestingly, but it does back up this hammer, which is sitting here on a support level. So you've got your reversal bar, you've got a test of the trend line, and now you've got a retest of this breakout level, which is around about the 149.50 mark, but it could go lower before it actually rallies. And that's the challenge that we've got, of course. Timing is everything. So the setup that I'm looking for, if I want to trade pound yen long, is okay. I could place an order above this candle now. Where's my stop loss go? I've probably got to go underneath here. So the risk to reward there is very, very poor. I'd much prefer to pick it up on a daily chart, let's say, or even a 4-hour chart. If price were to come back to this confluence area in particular on the daily chart, and we're talking not this week coming, but probably the following week, then I think that's probably a great place to look for a long here on pound yen. So I'm really not talking going long just yet. In fact, I wouldn't mind seeing this area here form the resistance. Well, it has formed the resistance, act as the resistance that it has already formed, and maybe trade it back down towards that area. So it's a case of short to get long, maybe short to get long. I'm not convinced that's the way to go yet. I want to see what price action does before I make a move on it. But two that really do come to my attention this week are these. One is CAD Swissy, and I'm looking at the monthly chart on CAD Swissy, and that's why it's of particular interest to me. You can see since 2015, I don't think anyone will ever forget the formation of that candle on CAD Swiss or anything that had anything to do with the Swiss. That was the 1st of January 2015 when the euro decoupled, or Swissy decoupled from the euro. And what we saw since then is price settle at that pretty much very level that it closed on after that reaction. In 2020, I think it was in June of 2020, March of 2020, we actually dipped below that level after, 5 years, 5.5 years. We dipped below that level. We've now got it back above it, above this trend line as well. And we've now retested that horizontal level, which is around about the 71, nearly 72 mark, basically. So that's why it's a particular interest to me. I can't see a reason right now why that would dip below that level. But as you can see on the monthly chart, the market didn't know what to do, well, during this month anyway, because it is in doji mode at this particular point in time. The interesting parts right now is that it's actually telling me that it wanted to drive short and test this level. There's nothing to suggest right now that I should go long. In fact, it's probably the reverse of that. But I am keen to go long. So I've got to find a way here. The best course of action on the weekly chart will be wait till this breaks, get back above it and retest it. I just don't know that we're going to be afforded that luxury, frankly. What I already see on the daily chart is the false break that I love to see. This is really, really nice, except it hasn't happened quickly enough. What I like to see is that break back above the broken trend line and then an instant retest. I didn't get the instant retest, unfortunately, but it's still there. How do I get into this is the burning question. On the daily chart, I don't see it right now, unless I'm willing to trade maybe at the top of that bar, which doesn't seem that appealing. Again, I'll wait for price to give me a hint tomorrow. There's a definite hint of an inverted head and shoulders there. if that's still the case on Wednesday, I'll have a good yak to Ash about that and see what his thoughts are. I love to trade these. I just don't see an entry for me at the moment, and I don't see where it's going to come from. Frankly, I'm just going to have to be patient. But if there's anything that happens in this vicinity that entices me into the market, then I'll certainly be looking to trade this long. And it's CAD Swiss. Still with the Swiss in mind, the last one I'm going to have a look at is Swissy yen, but did I change charts? It looks exactly the same, doesn't it? It's really very, very similar. Well, it doesn't actually, because we've spent a long time below this level versus CAD Swiss, where, hang on, we'll go back to that chart. We've only spent a short time below that level, in relative terms, that is. So really, this is new territory. And the reason I point that out is if my case was in CAD Swiss's example, that we'd spend a long time come below and now looking to retest that area here, which we're doing exactly the same thing, except that we've spent a long time below here. Are we looking for this to go back underneath is the question that I ask myself. At the moment, I'm seeing a range, which is really nice because I like to trade ranges. And I think that's going to be my focus for this particular week ahead, because I can't decide at this point whether exactly what I've described on CAD Swiss is going to happen on Swissy yen. And don't forget, this is a monthly chart. I think trading that range, this may stick around here for a little bit whilst the market decides. I think I'd like to trade this range. So I'll be looking to trade it from the top to the bottom at this particular point. That's given me already a beautiful scenario here where I've got a significant trend line as well. I've got a break above it, and I'm very close to the top of this range. What I want to see is price sneak its way back underneath that line after a little bit of consolidation. So Monday, Tuesday up here would be great. Wednesday back underneath it. Thursday retest it. Then I'll be short very, very quickly. But only down to here. And for the reasons I've just described, I don't know yet whether that's going to come back through that level or whether it's just going to take off and challenge this high. But it's rare air. It really is rare air for Swissy yen. So I'm thinking trade the range, and maybe if we get to the bottom of that range and trade it long, which will be my intention once we get down to this area, then leave something on the table when we do get to the top of the range, if that's the case, and see if we can take on this high up here. I think that would be exactly what I'll be looking to do for the week ahead, and probably a couple of weeks ahead. I think this is probably a good one to range trade for the week until we get a clear reversal off the bottom again, and then see if we can take on those highs. That is where I'm at with CAD Swiss, Swissy yen. I think they're my two favourites for the week. The two game changers, Aussie CAD and pound yen, are a little bit iffy, but I think a bit of price action on Monday and Tuesday will give us a fair indication of what lies ahead. My thanks to everybody who's been a contributor to the show today, in particular to those who have joined us and not participated in the show but listened to what we've had to say. We hope we've given you something to think about and to make money from throughout the week ahead. Have a great week. You'll next see me on Wednesday when Ash and I resume Trading Buddies. And of course, our great friends Lloyd and Alexis will be still holding the reins for Monday and Tuesday, whilst Ash and I still recuperate from the previous 6 months or so. Thank you, Silbra. Thank you to all who have commented in the box as well. We'll see you next week in the same time, same bat channel. Have a good one.